Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are up slightly today, about 0.1, 0.2%. Russell 2000 is up 0.5%. Oil is up to $64 per barrel. Yield curve is a bit steeper. 30-year Treasury yield is rising a couple of basis points towards 5% again. It might have something to do with what we're going to talk about in a second. Wall Street edges up ahead of NVIDIA results. Spotlight on tech valuations. The main U.S. tech indices inched higher on Wednesday as investors braced for earnings from AI chip leader NVIDIA that are expected to test the momentum of Wall Street's technology-fueled rally. NVIDIA was at the forefront of the market recovery after April's lows, crossing the $4 trillion market cap mark in July on global enthusiasm around AI to become the world's largest corporation. Traders worry that the companies in the S&P 500 Technology Index, which accounts for about 34% of the S&P 500, might be overvalued. Valuations of the benchmark index are well above long-term averages, according to data compiled by LSEG. The concerns weighed on tech stocks last week after OpenAI CEO Sam Altman spoke of a potential bubble, and a study from the Massachusetts Institute of Technology showed AI tools boosted individual productivity, but not corporate earnings. NVIDIA climbed 0.2% ahead of results, which are expected after markets close, while the broader tech sector inched up 0.3%. Options traders are pricing in about $260 billion in swing in companies' market value after the results. NVIDIA's strong results will be like Xanax to the market that was concerned over OpenAI's Sam Altman's comments, said Eric Schiffer, chief executive officer of the Patriarch organization, who expects an upbeat report. The impact of the Sino-U.S. trade war on the company's significant China business earlier this year will be closely watched, along with the effect of forecasts from its recent revenue-sharing deal with the U.S. government. The China story remains uncertain. Beijing is now pressuring domestic firms to buy local chips, which could erode NVIDIA's Chinese revenue share, said Ipek Özkardeskaya, a senior analyst at Swiss Quote Bank. Microsoft and Meta, NVIDIA's top customers, as well as semiconductor stocks Broadcom and AMD, struggled for direction. Energy led gains among the 11 S&P 500 sectors with a 0.7% rise. Markets were also stabilizing following Tuesday's initial decline after U.S. President Donald Trump attempted to fire Fed Governor Lisa Cook. Let's talk about that a little bit more. White House says Fed's Cook should go on leave until fraud accusations are resolved. At least one White House official said Wednesday that the Fed Governor Lisa Cook should go on leave until the mortgage fraud accusations that resulted in President Trump seeking to remove her from the Fed's Board of Governors are resolved. Quote, if it were me and I had made the mistakes of the accused, I would either deny it because it was not true, or I would go on leave until people resolve that, Kevin Hassett, director of NEC, told reporters. The fact that she's not doing that now suggests that she's being partisan, taking a partisan stance, which is contrary to the evidence. When asked whether Cook should be presumed innocent, considering she hasn't been found guilty, or just take leave, Hassett said, if I were in her circumstance, I would take leave. Cook's lawyer is likely to file a lawsuit in D.C. federal court on Wednesday fighting the president's decision. In the interim, the Fed has deferred the decision on Cook's status in view of pending legal action. In other words, Cook still works for the Fed and has access to emails. Whether she goes into the building or not is an open question. Cook said Monday in a statement that she will not resign and will continue to carry out her duties to help the American economy, Cook said. President Trump purported to fire me for cause when no cause exists under the law, and he has no authority to do so. Cook's lawyer said the president's attempt to fire her based solely on the referral letter lacks any factual or legal basis. Hassett told reporters that the accusations are serious. Since the Fed was established in 1913, a president has never actually fired a Fed member. Section 10 of the Federal Reserve Act states that each member of the board shall hold office for 14 years unless sooner removed from cause by the president. The statute does not detail what exactly constitutes for cause. That term has been interpreted in legal rulings to mean inefficiency, neglect of duty, or malfeasance. The Supreme Court suggests in a decision late May that Federal Reserve Board members, including Fed Chair Jerome Powell, were insulated from being fired by the president at will. Even as the High Court let firings of board members stand at the National Labor Relations Board and the Marriage Symptoms Protection Board as legal challenges to those removals made their way through the legal system. Interesting. Fed's Williams says needs to see how data play out to consider September cut, according to CNBC interview. New York Fed President John Williams said on Wednesday it's likely interest rates can fall at some point, but policymakers will need to see what upcoming data indicate about the economy to decide if it's appropriate to make a cut at the September 16-17 meeting. Every meeting, from my perspective, is live for a change in the benchmark policy rate, Williams said in a CNBC interview. Risks are more imbalanced. We're going to just have to see how the data play out. The Fed will get another jobs report and new information on the consumer price inflation before its next meeting, data that could now weigh heavily on the decision to cut rates by a quarter of percentage points from the current 4.25-4.5 range central bank has kept since December. Fed chairs said last week that the current economic outlook, coupled with the rising risks to the labor market, may warrant adjusting our policy stance. Powell's language led markets to bet heavily on a September rate cut, though comments by other officials since then, including Williams, a permanent voter on interest rate policy, have leaned more on coming jobs and inflation data to confirm whether a rate cut is appropriate now. Williams said he had no comment about the allegations raised by Trump against Cook. But of Cook, he said she has always brought integrity and commitment to the Federal Reserve's mission. While not directly addressing Trump's attempt to fire her, a matter likely headed to court, he said, the structure of the Federal Reserve is designed to have independent policymakers who are making decisions that affect the economy over the longer term, away from short-term political pressure. And I think that's really, really important. Now, company-specific news. NVIDIA to report second quarter earnings, expects $8 billion hit from China chip ban. NVIDIA will close out Big Tech's earnings season when it reports its second quarter results after the bell on Wednesday. The report comes after a flurry of moves between the company and the Trump administration, which saw Trump revoke his prior ban on the sale of NVIDIA's chips to China, but will also now require AI giant to pay the government a 15% cut of sales into the country. Trump initially banned the sale of chips to China in April and dropped the ban in July, adding 15% fee in August. During the Q1 earnings call, NVIDIA said it expects to take an $8 billion hit to its bottom line in Q2. Trump also announced he will place a 100% tariff on semiconductor shipments into the US unless companies commit to building in the country. NVIDIA should be exempt from the tariff. NVIDIA shares were up 35% year to date and nearly 44% over the past 12 months as of Tuesday. In July, the chipmaker became the first company to see its market cap top $4 trillion. Its stock was slightly higher before the bell on Wednesday after rising 1% during the Tuesday session. For the quarter, NVIDIA is expected to report adjusted earnings per share of $1.01 on revenue of $46.2 billion, according to Bloomberg analyst consensus estimates. The company saw adjusted EPS of 68 cents and revenue of $30 billion in the same quarter last year. That works out to 49 to 53% year-over-year EPS and revenue growth, respectively. Okay. Kohl's sharper focus on turnaround drives profit lift. Shares surge. Kohl's raised annual profit forecast on Wednesday, said the U.S. department store chain's years-long turnaround reduces costs, and its fresher product lineup brings back customers, sending its shares up 20% in early trading. The company also reported a second straight quarter of sales beat as efforts to reassess the product assortment pay off, even as it grappled with 3 CEO changes in as many years, with the latest leaving after about 100 days. Quote, "We really think we're set up well to deliver value when it's going to become incredibly important to that customer in the back half and especially the holiday," CFO said in a post-earnings call. After Sydney Sweeney controversy, American Eagle taps Travis Kelce to sell jeans. On the back of the American Eagle outfitter Sydney Sweeney buzz, the company has nabbed Travis Kelce as its newest face. American Eagle's true colors, Kelce's brand, to release a collaboration with the jeans maker, including t-shirts and sweatshirts branded with the Kansas City Chiefs stars label, as well as sweatpants and the trousers. You can see the ad here. I own American Eagle shares, by the way. Even a 15% tariff rate for autos means new car prices could rise about 8.1% or $4,300. Consumers are going to be paying a lot more for new cars, even if the White House strikes tariff deals with the biggest car importers, according to a report from Cars.com. Currently, President Trump's auto sector tariffs stand at 25% for most of the world and 27.5% for exports coming from the EU. Preliminary deals with the EU and Japan have the rate coming down to 15%, but there's still much to be done to make the deals final. But even if those rates come down, Americans will be paying significantly more for cars. Cars.com said if tariffs remain at the 25% rate, Analysts estimate the average new vehicle price could rise 13.5% to $54,400 from $48,000, a difference of $6,400. But if the trade negotiations bring tariffs closer to 15%, prices may still increase by about 8.1% or $4,300. Prior to Trump's tariffs, auto imports from most countries faced 2.5% tariff rates, but those days are over. In the second quarter, the largest automakers in the US cumulatively took an $11.7 billion hit to profits from those tariffs and can't absorb those tariffs costs in the longer term. And finally, from China, new Xpeng P7 autonomously drives from production line to shipping area in China. The new Xpeng P7 electric liftback can autonomously drive from its production line to the shipping area at the factory in China, proving that Tesla is not the only one. On that note, thank you very much, everybody, and I will chat with you all next time. Take care.